Common Sense Real Estate Show.
Common sense approach to real estate.
Thank you, Carmen. That's Carmen Lonardo. I am your co-host, Kurt the Boomer Schenk, here again for another podcast dealing with real estate and cooking. Just saying. We do have a special guest today. She is Kim Chizuk, the Vice President of Mortgage Lending at where, Kim?
Guaranteed rate.
Okay. Got that, folks?
Guaranteed rate.
We're going to get to her shortly, but we're going to talk about what's going on with real estate this time of year. Carmen, is it's busy.
It's really busy. Just before we started, I've taken like 3 calls already this morning, people wanting to see houses today. And it's good that I've got backup, people to help because you can't be in 2 places at one time. So it's going to be a very busy afternoon today, showing houses, going to open houses, and probably writing a couple of offers today.
Really?
Yeah. Very excited about that.
Okay.
Yeah.
And what are you seeing? Are we still in that 150 to 250 hot range?
Yeah,
for homes?
That's super hot. Yep, 150 to 250, 280. That's bread and butter kind of stuff, and that's a very, very hot market. Absolutely.
And what if you've just decided, or something's come up, and you're like, "Well, we have to sell our house," and it's sort of a short notice. Maybe you're not prepared. What would you tell a seller? How would you work with them on that?
Yeah, well, the first thing to do is to come through and take a look at the house and see what needs to be done to get it ready for market, right? If you're able to have a 1 or 2 year outlook to get your house ready, that's a lot different than having a 1 or 2 week outlook. But generally speaking, the 1 or 2 week outlook doesn't happen.
Unless somebody's relocating or something like that.
Unless it's an emergency kind of thing, it really doesn't happen. And then, there's just certain things that you can do to get it ready. Declutter, clean it up, paint, that kind of stuff. And the process becomes a little less involved. But and then at that point, you also have to price it accordingly, right? Because you haven't done some of the other things that you might do if you had a 1 year or 2 year outlook to get it ready.
Okay.
Yeah.
And for buyers, one of the most important things is getting pre-qualified.
Absolutely a necessity. Yeah.
And that's why we have our guest here. And actually, as you said, there's some alliteration going on here.
There is alliteration. Kim, Carmen, and Kurt. All right. That's alliteration.
And there'll be a quiz after this podcast,
right.
So you know that.
Yeah.
So, Kim, welcome to the
Robert.
Common Sense Real Estate Show. Glad to have you here.
Glad to be here.
Why don't you tell us a bit about yourself and what you do? And it's as simple as that.
Yeah.
Yeah.
Simple.
What do you do? Where are you from? What, where, when, how?
I'm originally from here. I grew up in Fairport. My family and I still live in Victor. I'm married. I have 3 children, and I've been a mortgage originator for over 20 years.
Wow.
Wow. Really?
We're gonna just leave it with that.
Well, how'd you get into mortgage origin? Did you work for a bank first, or?
I did start at a bank, but it wasn't my first job out of college.
Okay.
And I started interviewing people with really cool jobs, and I thought loan officer sounded like a cool job, so I interviewed one. And I really liked.
Thought you were going to get a badge, right?
I thought I was going to get a stick. I was the stick. I wanted a baton, but that doesn't happen. So, but I really liked how it was described. At the time, it was a little bit of paperwork, a little bit of client meetings. It wasn't doing one thing all day long, which is not my wheelhouse. So,
right.
I met with a couple banks and got started, and 20 years later, here we are.
I assume there's some sort of certification you need to be in your position to, or not?
Not at first, not when I was working for a retail bank, but as I've expanded my career, I have had to be licensed with the state of New York.
Okay. And obviously you want to look for a licensed mortgage lender or expert, something like that, right?
I did.
Okay.
I did.
All right. Well, tell me the kind of people or buyers you're working with. What are you seeing out there?
It's a full pipeline right now. It's everything from the first time home buyer to the move up buyer. and anything in between. We've got some second homes going because of our lovely Finger Lakes and other surrounding areas that appeal people from out of town. And then there's always a host of people that are in what we call more like credit counseling, getting ready, not quite there yet, but working with those as well.
It's a good segue, Kurt. I've got this piece here that's very good. It's one page, easy to get through. It's got some fantastic information, and it's boost your credit score regardless of your age. And if somebody would like a copy of this, I'd be more than happy to send it to them. They can just contact me at 585-233-4119. That's a cell phone number, so call or text. Be happy to send it out to you, either to your email as a PDF, or I could mail it to you, whatever you like. So, and I think that's probably an important topic today, as people are qualifying for mortgages, is their credit score. How does credit score impact someone's ability to get a mortgage?
Credit score is really your opening ticket, I call it, to get into the ball game. So each program has its own credit score minimum. So we need to know what you're eligible for right out of the gate based on what your score is. So the higher the score, the more programs you can look at for financing choices.
So obviously that's going to affect the rate too, the lower the credit score.
It can, yes.
What kind of credit scores are you seeing out there? I'm not going to beat around the bush. What are you seeing? Are you seeing people coming to you with 520s or the 8,000s?
Right. Good.
I mean, what's the range? I mean, without being specific.
Right. They tell us there's a range from 450 to 850. I have never seen an 850. I don't know who gets that.
Okay.
So to put that out there, very few even in the 800s. There's an occasional slightly over 800. Most that we consider top tier is 740 and higher. So, I mean, that kind of gives you the bearing. And then the 600s is still completely workable. And then once you dip below 600, you're limited and or not eligible.
Well, so what is there like? Is there a minimum if someone has a credit score that is below a certain number that there's just no way they're getting financing?
Yes, there are numbers that you can't get financing for. Each bank can set their own. So, for example, at my company, I can offer an FHA or a VA veterans loan at 580 or higher.
Really?
Yeah.
Okay.
But there are some other lenders that can do slightly lower, and some of them are restricted slightly higher.
So what kind of what kind of mortgages are out there? There's the you mentioned FHA. There's VA. What else? What else do we have?
There are state of New York mortgage agency loans, which we call Sunny Mae.
Sunny Mae.
There's the conventional products, which have come a long way in affordability, which we're thrilled about in today's market specifically. I'm sure we'll talk about that in a little bit. There's renovation loans, if you see something that's a little distressed or not quite as you like it. And let's see, conventional.
Yep.
So what about that renovation loan? How does that work?
Yeah, I'm interested about that.
Yeah, it's a great loan product. It's one of my favorites. So that's a loan that allows you to buy and build into the same piece of financing the money that you need to do either required repairs or desired repairs, and you build it all into your first mortgage. We design all the work before closing, but we don't actually execute on anything until after closing when the buyer owns the home.
How does that impact the appraisal process? Does the property need to appraise for the higher value since they're borrowing more money?
It does. So we don't order the appraisal until we have the work designed so that the appraiser has a full understanding of what the finished product will be.
Wow, fantastic. A lot of people use that product?
It's extremely popular when you're looking at foreclosures, as they're often distressed, and sometimes it's mandatory to use that type of financing.
Right.
But in the last 15, 20 years, our housing stock has aged a little bit. So even when you're looking at bigger ticket roofs, furnaces, hot water heater, when you're making your first home purchase, it can be a really helpful way to get those things done.
Now, I had heard a statistic not too long ago that went something like this, that something on the order of 65% of all mortgages are FHA. Does that seem right?
That would not surprise me at all.
Yeah.
And I think you'll see that trend change. We're less is government-based, but there's, in this market specifically, in the Northeast, that would not surprise me one bit.
And what about, you didn't mention a portfolio mortgage. I hear that tossed around, frequently. What's a portfolio mortgage?
A portfolio mortgage is a mortgage offered by a retail bank where they basically make up their own loan. They're not trying to sell it on the secondary market. So they make their rules. They make their decision based. A lot of times it's for their Community Reinvestment Act criteria, so that they're giving mortgages to specific demographics in specific areas. And they have the right to design that product and implement it the way they want.
So it could be for someone who is not a traditional borrower.
Correct.
Right. Okay. Fantastic.
And why are to backtrack? You said you'd like to get more into discuss more about conventional loans. Why are these becoming more appealing? Why are they better products than they were?
A couple different things have come to play. So the market has become extremely competitive, and sometimes the seller, when there's a bidding situation, they look at the government financing as a more cumbersome mortgage type, meaning they're not quite as comfortable taking that offer over a conventional financing offer. Okay. So the conventional loan programs have lightened up their down payment requirements, where it was 20%, then they offered 5% with mortgage insurance, and they've lowered them again to 3%, which is extremely competitive against FHA financing at 3.5% down in terms of affordability and an ability to look at different programs for clients.
And as I recall, FHA needs an inspection, I believe, as part of the mortgage process, or not?
Well, all loan types are going to have an appraisal.
An appraisal
done. But the misconception is that the FHA appraisal will be a little more or a lot more intrusive into the house and in the features, where it's kind of level set a lot over the last few years, but as a seller looking at different offers, that's in their head. So when they're considering all the different buyers that they can consider offers from, that's going to be in there.
Okay.
Right. They're more inclined to go for a conventional buyer with a conventional financing than an FHA or VA or USDA. USDA,
I forgot to mention that.
We don't see USDA a lot in our area because that is targeted to rural areas, right?
Yeah.
So if I remember correctly, here in our area, it's on the east side, it's the Monroe-Wayne County line. And on the west side, it's Manitou Road.
With a little bit of jagger around, but it's
squiggly.
Yep, but if you look at the New York State Thruway and then those two pockets west to east, that's kind of
What's the benefit of the USDA?
The USDA is a really lovely loan program. It does have an income limit on it, so it's designed for low to moderate income families, but it's a zero down option, and even with nothing down, it's got a much lower mortgage insurance rate on a monthly basis. So they're really doing everything they can to make that house affordable for that family.
You know, I'm glad that you said zero down. One of the things that often confuses buyers, you talk about closing costs, right? And you know they're confused about having to bring money to closing because they thought they had a zero down loan product, and I guess the confusion is that people aren't educated about what comprises closing costs. So can you talk a little bit about that?
Absolutely. When I meet a new buyer, especially a first-time buyer for the first time, that is really where we spend the most chunk of our time, because a lot of clients can afford the monthly payment. They're renting already. They're ready to do that, but the cash to close can be a real eye-opener, and it's a high point of education. So every mortgage loan has the same three buckets it has to meet. It's got a down payment requirement that's set by the program. In some cases, thankfully, it can be 0%. But then there's closing costs, which is all the things that the mortgage company goes through in putting that loan on the books. And we pass through those charges to the buyer at the closing table. And if you thought about it long enough, you'd come up with them. But it's the appraisal, it's the credit report, it's the attorney. We have to close in New York as an attorney state. We put the mortgage on record at the county clerk's office. That's $400. So it's a lot of little things that adds up to several $1,000s. Right. And then the real eye opener is here in the state of New York, we pay our taxes in advance for the year.
Yep.
So dealing with the property taxes between the seller reimbursements and the creation of the escrow account going forward can become the most expensive item on the page, and really becomes the point of education of how to get through that and different ways you can put together your cash to close.
So the biggie there, the real estate taxes. Let's use that as an example, because I think that is something that I find myself explaining to buyers all the time. So let's talk about the town and county tax here in Monroe County. It's levied at the beginning of the year, right?
January,
So
yep.
you get a tax bill in January after the first of the year. Yay!
Right.
Yeah,
For those of
good
us that
time.
don't, escrow shows up right with the
Right.
Christmas bill.
And so that is for that year. So in 2019, right, we got a tax bill in 2019, and you either pay it in installments or you pay it all in one lump sum, or it's included in your mortgage, right?
But it's still paid.
That's still paid. So that tax bill covers the town and county tax for that entire year. So January 1st through December 31st of that year, right?
Perfect.
So what happens if somebody closes on a house on June 30th that year?
Nice, easy example. Thank you for making it simple math. So in that case, at the closing table, we're going to prepare the buyer that the seller is due half of that tax bill back, because now that was paid for a full year and now you are the owner of the home. So that reimbursement is going to happen at the closing table. And even though those charges aren't coming to us as the bank, as your mortgage person, I'm preparing you for that, because you need to understand everything that's coming to the closing table, whether it's coming from me or coming, because that's a large amount of money. If you think about a $2,000 tax bill, that's half of it's $1,000 right there coming.
Right.
And school taxes is the same thing, same methodology, but it's a little bit more confusing because it's actually levied July 1st, but it isn't billed until September, post Labor Day, right? So that gets a little weird, but it's the same thing.
What we do, just for easy math, is we talk about 12 months of taxes as just a nice worst case figure, and then to explain that it'll be broken into pieces. Some of this will be going back to the seller. Some of this will be used proactively to create your escrow account so that we're ready to pay your next tax bills as well. But between the two of us, if we use that as a place card, it has you well prepared for closing.
Yeah, great.
And you said escrow. Is everybody on an escrow?
Unless you're on a conventional mortgage with 20% down, you have to escrow.
So you have to escrow.
Let's be clear, since this is also in part a cooking podcast.
That is true.
It's escrow, not escarole.
Correct.
Thank you, Carmen. Lonardo.
Okay.
Yes. Carmen.lonardo.remax.net with your cooking questions.
Yes.
All right, back to Kim. What we move forward in this conversation on being prepared. The people being prepared, they're not surprised at closing about some of these costs. What about pre-qualifying?
Pre-qualifying has a couple different phases the client can take, and certainly in this market, we're encouraging them to take all of them. So it usually starts with a general conversation, ask any question you need to so that you feel comfortable moving forward. We then encourage the credit check so that we know the ticket to play, so to speak, and we can look at all the different programs. We try to identify what is the best possible payment based on the financials that you already bring to the table, right? So you already have a car payment, you already have a student loan payment, or whatever the case may be. So what do we think is the right mortgage payment for you in our mathematics and our formulas? And then we have a nice conversation about that, because sometimes we think more than what the client's comfortable with, and great, because I always say, I don't know how often you like to go to the movies. So that's your discretionary spending, not ours. So once we find a happy place between the two of us about what the monthly payment should be, then we back that up and we talk about, okay, that payment with the escrow for taxes and insurance is about this much for a house payment, give or take, with some flexibility in taxes. And if you're using, for example, a conventional 3% down and you've bought this 120 house with $4,000 in taxes, then this is about what you should be prepared for closing. So it's preparing them for an approximate monthly payment and cash to close, and talking about the different ways of putting that cash to close together. Once we kind of get through that process, we then move into the doc collection phase, which is where we actually get the pay stubs, the W-2s, the bank statements, all the information we need to say, okay, everything we discussed is actually what we have,
right?
And you're ready to go out shopping.
We throw around some terms interchangeably, but they mean very different things, right? So when someone says they have been pre-qualified, that's different than a pre-approval. So explain what the difference is there.
And believe it or not, different banks have different interpretations of the same words. So when I sit on the board level, we talk about this a lot. So in general, Prequalification means we've talked about it. You've told me how much you make, and you've told me your car payment and your credit card payments, and we've discussed what your comfortable mortgage payment should be. Where pre-approval means I've checked your credit, I've pulled the finances, I understand what programs you're eligible for, and in cases where I felt necessary, grab the documentations needed in order to be able to understand your financial picture and be able to tell your realtor with confidence, we're ready to go.
So an offer with a pre-approval is a much stronger offer than an offer with a pre-qualification. Would you say that's correct?
Agreed. Absolutely.
Yeah. Okay.
So then, Carmen, when do we bring Kim into the process? If you're buying,
yeah, right at the beginning. You know, when whenever somebody contacts me, whether it be a lead from a listing or some of my advertising someplace else, or whether it's a referral, the very first thing that we talk about is pre-qualification, because there is no sense in looking at anything unless we know exactly what you're going to be able to afford.
Sure.
And sometimes, the income may be there, the assets may be there, but the credit isn't there.
right?
And so they're not ready. They've got to talk to someone like him to sort all of that stuff out and make sure that they're ready to go.
I'd like to jump in there
jump
too,
in. Go
because
ahead.
I think there's often a misconception that we are looking for ways to say no. And credit can be a big piece of that. But the reality is we're looking for ways to say yes. And I tell all my clients the same thing. I'm not the judge or the jury. If your credit isn't where it needs to be, this is the time to check it and to work on it, because it's a living, breathing thing, and we can change it. And I need buyers next year. Carmen needs buyers next
Sure.
year. So
Yeah, you want to help people.
as much as we're happy to send people out today
Get
if
the
they're
loan
ready,
in the house.
but I need clients 6 months from now too. So we'll work with you and get you where you need to be.
Say, Kim, and we talked a little bit a few minutes ago about this closing costs and down payment. So, are there any options if somebody doesn't have the savings?
There are options. So each program has its own different rules, but there could be a few different ways you can put it together. A lot of the loan programs allow for gift money, and a lot of times mom and dad, grandma are
Sure.
happy to help you get your first home. They had help getting their first home. There are grants out there. Different agencies offer the different grants. That's typically geared to your low and moderate income families. There are rules about trying to negotiate some of the costs through the sales contract, but that can be a little challenging in a bidding situation on a
Are those
property.
concessions? Is that seller's concessions?
Seller's concessions, yeah. The only thing you can't do is borrow money. You can't go get another loan
to secure a
to
loan.
secure your
Yep.
closing costs. But
Right.
that one's kind of remained constant throughout the years.
Great. We throw around a lot of terms all the time in this industry, and I find that clients often get confused about what it is that we're talking about.
We have our own language.
And so I've got this really neat thing that I offer for folks. It's a glossary of real estate terms. And you can get this. It's free. Happy to give it to you. Just call or text me, 585-233-4119. Boomer, we really need a jingle for that one.
Let me give it a shot. Call 585-233-4119. I think John Betlam might have a problem with that one.
And
No,
there was an extra 3 in there.
That really doesn't. It doesn't
Well, I
work.
was trying to make it work.
That didn't work so well.
I voice commercials. I don't sing them.
Kurt, the right creative.
Thank you. It's good to be here.
The sing lousy.
Yeah, it's. I speak in 15, 30-second, and 60-second increments. So.
Well, impromptu jingles is
Yeah, no,
it's a tough category.
If I could get into studio when nobody knows it and bring a singer in, then I can pull it off. So now back to task in hand. If somebody's got a good record score, but this whole debt to income ratio thing I keep hearing about, can that throw a wrench into the process?
It can. Certainly the house payment needs to be one that's affordable, both in our opinion and in theirs. Our opinion kind of trumps theirs at the end of the day.
Okay. Yep.
So, but a good originator is going to try and get creative. Like, well, maybe instead of putting less down, what if we pay off X, Y, and Z and help bring that debt to income ratio in line?
Right.
It's one small loan, and it's permanently removed from your debt load, makes room for a little more in your house payment. So looking at things different ways is, and using creativity can help offset that. And hopefully we're not stuck at the end of the day.
And Carmen's brought that, sometimes you got to do some credit repair, right?
Mm-hmm.
Okay.
Yeah.
And that's, you would be honest with them, as like, look, there's some things you need to do before we really can move forward on this. And you're just going to, honestly, you got to pay some of this down and maybe not have 3 inquiries in the last year. And this is not based on personal experience, I just want to say. But, things like that to make your credit better. I mean, there might be some coaching involved, right?
Absolutely.
Yeah, right.
Absolutely.
So we this podcast is, we're starting to push the end, and we could talk about mortgage financing for hours and hours and hours.
It's
right?
actually fascinating.
It is. It's. I lose sleep over this stuff.
Well, I do.
That's why she has a calculator handy at all times.
When I cook, I stop in the middle of whatever I'm doing and I think about, mortgage financing. But, folks may have a question that we didn't have time to cover the topic today. Right?
Yeah.
So how do they get a hold of Kim?
Well, say it. Come
Oh,
on.
I'm on
Plug
set.
yourself.
I
Yeah.
thought you were singing the jingle.
No, I'm not.
No.
Yeah. So what do we got?
So
How do we get in touch with you?
The
Kim?
best way to reach me is on my cell phone, which is 585-734-9389.
Okay, great. And email?
Oh, Kim.Chizuk, which is CHIZ, like zebra, UK @rate.com.
And she works at guaranteedrate.com. And I will profess that Chizuk, which is spelled CHIZUK, she's like, I'm an Italian girl. No way. But you ought to see her hands. She's hit the mic at least 6 times.
Yeah.
The hands are all over the place.
Well, she's shaking my mic too. I mean,
It's just crazy. She's about as
like
Italian as you can
the
get.
room is having tremors.
Except I can't cook, so I'm excited to hear what Carmen's going to bring for us.
Speaking of which, it's time for
Carmen Cooks.
Carmen Cooks.
All right.
Okay, a few weeks ago here on the podcast on the Carmen Sense Real Estate Show, we talked about
Frozen pizza dough.
So let's follow it up with toppings, Carmen.
And do you remember what the tip was with the frozen pizza
to take
dough,
it out
Boomer?
frozen and take it out and
When do you take it out? Do you remember?
I forget.
Man, come on. Seriously? Got to take it out 24 hours before you intend to use it. Give it time to thaw.
And it does something.
And
The proof.
Proof. It turns into a fluffy, air-filled balloon. Yeah. All right. Pizza toppings. There are some very traditional pizza toppings. We got the peppers, the onions, the mushrooms, the anchovies, the pepperoni, the mozzarella cheese, a little bit of pecorino. But, tonight, for example,
What are we doing?
I'm gonna do a spin off of white pizza that I just had at Joe's Brooklyn Pizza the other night.
Joey's Brooklyn Pizza?
Yeah, over at the 12 Corners. They do a fantastic job there.
Good stuff there.
Yep. I wish I had a piece right now. As a matter
Me
of fact.
too.
So I had they had this white pizza there with black garlic. And I've heard 2 different things about this black garlic. Someone told me it's fermented. Somebody told me it's roasted. I don't know, but I'm going to figure it out. I got some. And it was some black garlic and some pecorino romano cheese on top, some olive oil, and I think that's it, maybe a little mozzarella cheese. So I'm going to do a little twist on that tonight. I'm going to do the black garlic and marinated artichoke hearts.
Really?
And grind of some black pepper and some pecorino romano cheese, a little bit of mozzarella. And then the second one is going to be the more traditional Neapolitan variety, the pizza margherita with real Samarsano tomatoes and mozzarella di buffalo milk mozzarella, and fresh basil, a little olive oil, and we're going to have
The
some
mozzarella.
mozzarella. Yeah.
Hey, can you tell? We have 2 Italians in the house right now.
Yeah.
So it is making me hungry too. So
I've been hungry all morning. So
that's what's cooking on the Common Sense Real Estate Show.
Common sense approach to real estate.
Common sense approach to real estate. Yeah, I think we're getting a little rapport on that. You jump in thing. I got to give you a little bit more of a pause there.
Yeah, you do.
We'll get better at this, folks. I'd like to thank Kim Chizuk again, Vice President of Mortgage Lending at Guaranteed Rate. Kim, how do they reach you again, please?
585-734-9389 is my cell phone. And thanks for having me. This was fun.
Yeah,
it was fun. And Carmen, how do people get in touch with you?
Cell phone 585-233-4119.
And email at carmen.lonardo@remax.net. That's LONARDO. You can find them on Facebook and LinkedIn, Twitter too.
Twitter at On the Move Realty.
On the Move Realty.
And the Facebook is Real Estate on the Move. And don't forget Carmen, Lonardo, and Associates.com.
At the Remax Group.
At the Remax Realty Group, yeah.
Yeah. Thanks to them. And thanks to Scott Fitzgerald here at RockFox. Does an incredible job. If you're ever looking to do podcast and legacy videos and things like this, narration, this is the place to come. I guarantee it. He's great. And I'm Kurt Boomer Schenk from The Right Creative.
He's a nice guy, too.
He's sort of nice. He's
nice.
Probably going to cut your mic in any second. And I'm Kurt Boomer Schenk from The Right Creative. And until next time, this is the Common Sense Real Estate Show.
Your common sense approach to real estate.
See you later.
Bye-bye.